I'm sure you've heard in many videos that if you invest in large cap mutual funds, then you will get around 12% returns year on year for the next 20 years, 30 years. And if you invest in mid caps, then you will get around 15% returns. And if you invest in small caps, then you will get around 18%. This is the bare minimum that every other influencer on YouTube says that, right? But I just have one question that how do they devise this? Some say that they have devised this by looking at historical data that historically Nifty has given so much returns, or the mid cap index or small cap or whatever. And if you ask some YouTubers who are like the economists or whatever, let's not go there. But yeah, they devise a process which is, I guess, mathematically, which is pretty sustainable. That they say that they add the GDP numbers, that 7% is the nominal GDP figures. Along with that, they add in the inflation numbers, which is around 6%, and they get the figure of around 12 to 13% returns, and they extrapolate it basically long term to the foreseeable future. But if you ask any of these YouTubers, be it the historical ones or the economists or anyone, if you ask them that what will happen in the future, will the FD rates go down or will the FD rates go up? Each and every one of them will say that the FD rates will come down, and which is very sustainable because we are developing economy, whatever they give reasons. So my question is, if the FD rates go down, then how are the inflation numbers gonna stay at 6%? Because let's be honest, right, FD rates are normally, if you see historically or even if you see in the current times, FD rates are normally around 1 to 2% either lesser than the inflation numbers or 1 to 2% more than the inflation numbers. Along with it, if you deduct the taxes, then you're of course not beating inflation, but normally they're 1 to 2% above inflation numbers, right? So what happens is, if the FD rates go down, that means the inflation numbers are supposed to go down. And in every developing nation, in every developed nation, the inflation numbers are around 2 to 3% or 4% at max. If 5%, then the nation will collapse or some revolution will happen in the nations like America or whatever. But yeah, so in 2047, if by the standards of everyone, be it Modi ji or our YouTubers or anyone, that inflation numbers come down, then how are the numbers of 12 to 13% are sustainable in the foreseeable future? This is one point I don't understand, and one point which none of these YouTubers preach to their clients or their viewers, and which I don't believe is something that should be happening. Because, see, I also handle clients' money, and I am very honest with them that whatever numbers you are saying, 12, 13, 14% returns, some of them are getting around 50% returns from small caps because they've invested in the last 4 years. But I ask them to be very realistic, because when I'm handling a particular client's money, what is happening is I have to extrapolate returns for the next 20 to 30 years, of course. But the client also has to stay with me for the next 20 to 30 years. And after 20 years, if I'm not delivering the 13% returns or 14% returns, then there is some fundamental problem with the advice that I did give, right? Because they depended on me, they relied on my information, and they invested either through me or they invested themselves, DIY, or anything. But they decided to bank on the fact that I said that in the foreseeable future you will get 12 to 13% returns. But fundamentally, it's not viable. Simple reason is GDP numbers can't continue to grow at 7% per annum. Already, you will see some economists are saying that the GDP numbers of 7% are a complete sham. Real inflation numbers are not at 6% because 6% is only the food inflation prices. There are many economic theories. I don't want to get too much into technicalities because it's not useless. Because ultimately, what you want is returns, right? If you're an investor in mutual funds or stock market or whatever, you want returns. So I'll stick to that. So what will happen is the GDP numbers will go down in the foreseeable future as the economy grows. Currently, it's at 7% is fine. The inflation numbers will come down, and I'm more focusing on inflation because that is something that has been seen in each and every developed country, that the inflation numbers are very low. And if the inflation numbers are low, then 12-13% returns is not fundamentally possible. So in my opinion, even if I take 6%, I'm being very conservative. If I take 6% of GDP growth and along with it, I add in an inflation number of 4%, then we are getting around 10% returns, nominal returns. And I think that is something that you or anyone who is investing through mutual funds should expect in the foreseeable future for the next 20 to 30 years. Of course, you can get more. Don't like kill me that, oh my God, Rutu said this and I got 13%, 14%. It's always better to expect less and get more, because the more you expect, the more disappointed you are. And it happens in all aspects of our life, be it health, relationships, whatever. If you expect less and if you get more, you're always happy. And if you expect more, the chances of you being disappointed is very high. So why do I say this 10% number, this figure of 10% to my clients, and I help them manage their money? Because it's simple is I have to be conservative in my aspect as well. As I said earlier, if 30 years later I tell them, they ask me that, Rujo, you said I'll get 15% or 18% in small caps, and I only got 12%, then I should have the safe space to say that, sir, I did tell you that no, you should expect nothing more than 10%, be it large cap, small cap, mid caps, or whatever. Because that is something which is realistic, and any number other than 10% or more is very unrealistic for if I extrapolate it for 20 years. Because frankly speaking, if you want bigger returns from the stock market, right? That means India needs to develop as a country. And if India needs to develop as a country, the inflation numbers needs to go down. Otherwise, how is India becoming a developed country? And if the inflation numbers are always up, then India is not becoming a developed country. And if India is not becoming a developed country, then you are not getting real returns from the stock market as well. Sorry, higher returns from the stock market as well, because it's not possible. If the companies are not growing, if the earnings are not growing, then how is the stock, is the mutual fund supposed to give you returns, right? So I feel in the foreseeable future for the next 20 to 30 years, the best way is to expect 10%. And I, this is my ultra conservative number, because I handle people's money and I really take care of it so that I don't put their money into risky assets, because they're working hard to earn their money. And I am taking away the time from them, that they can focus on their work, job, business, or whatever, and they can keep their mind out of the stock market because I'm handling it for them. They can focus on earning more money. I can focus on giving them better risk adjusted returns, frankly speaking. So if you want to take guidance from me, or if you want to talk to me about your own financial goals, or get your complete financial planning done, then there is a link in the description and you can feel free to book a call with me. And if you want to see a video in which I have described a strategy through which you can invest lump sum money into mutual funds, because the market is down currently as on 2024, so you can check out that video in this link, and see you in the next video.